Hi, I'm Kafense Mandisa, and thank you for joining me for my second edition of my Risk Talk podcast. And today I'm going to talk about how do we navigate through a hard market, and what exactly is a hard market? Let's start with that. Uh, the insurance industry have market cycles, much like a real estate market, which is what most people are familiar with, right? So in the real estate market, we have a buyer's market and a seller's market. Well, in the insurance industry, we have a hard market and a soft market. Well, in a soft market, insurance companies are competing over your business. So they're offering great terms, and they're also offering lower prices. So you're able to get better terms in your insurance contract at a lower price. It's great. It works out for the business owners or for the consumers. But in the hard market, it's the complete opposite. In the hard market, there isn't a lot of competition between insurance companies, so they aren't offering the favorable terms in their contracts. So they're not giving you, the great coverages as that maybe they would in the soft market. But also, the prices have increased because there isn't a lot of competition. So the insurance companies say, take it or leave it, basically. So it raises the prices. And if you didn't know, we are currently in the hard market right now. We're in the hard market. It's official because property rates have increased over 20% in this first quarter of 2020, and directors and officers rates have increased by 40%. That's astronomical, and it's actually is going to go up even more. So it's not going to slow down anytime soon. But how do we get favorable terms in pricing then? How do we navigate through this hard market? Okay, well, the, the best way to navigate through this hard market, the best way to try and make sure that you get favorable terms and you get the best pricing that you can get is by effectively managing your risk. Effectively manage your risk will help with pricing and the terms. So how does business owners managing their risk, how can that reduce their price that they pay for their insurance? And how can it increase the amount of favorable terms that they get in their insurance contract to make sure their contract works for them? Well, this is how. Let's go over the risk management process and show you what that looks like so you can see exactly how managing your risk can get the outcome that you desire. So looks here. So first we want to control our risk. This is a risk management process you see here to the left, but I want to control this risk first. So we first come up to the top because we're going to do what we can internally to control this risk before we go down to the risk financing steps. So if the first choice is avoiding a risk. So if that's an option, you can completely avoid a risk, then that's great because you won't have that risk at all because you avoided it and you do not partake in it. But that's not an option for everyone. But let's say you want to prevent a risk instead of avoiding it. So you're not avoiding it altogether. But let's say you have a factory and you might have equipment in a factory and you know theft is or crime and theft is a risk that you're worried about, but you really don't have any alternative. So to prevent that risk, you may have cameras, security guards, surveillance. So that's a loss prevention technique that many businesses use for different circumstances. But also we have loss reduction. And what loss reduction will be, we know there may be a loss, and if there is a loss, we don't want it to happen, but if there is a loss, can we reduce that damage? A great example of that are fire sprinklers or water sprinklers, because if a fire happens, of course it's going to damage the building. You can't stop that per se, but at least the fire sprinkler can put out the fire before it spreads throughout the whole building. So it limits that damage, it reduces the damage. And loss separation. And loss separation is great for separating key assets and dispersing them. So that way, not all of your assets, not all of your property or equipment are subject to one single loss. So for example, if you have half your equipment in one location and another at another location, you separated that. So let's say you have one fire at a location, all of your equipment won't be damaged. So that makes sense. A lot of companies practice this. They may not call it loss separation technique, but it is a great risk control technique. We also have duplication as another technique, as you see here. A good example of that most people use in their everyday lives is the second set of keys, right? But for businesses, you might duplicate your data or you might have a backup system. So that way, if you're hacked or if your system goes down, at least you have a backup system that you can use if you so need it. And diversification, just diversifying your risk. So if you're a business owner and you just make widgets, maybe you make umbrellas, just in case the widget business go out of business, you still have something there with the umbrellas. So now that we control our risk, and we did a good job of controlling our risk as best as we can, now we're going to go down here to finance the risk, right? So not only are we going to tell you about how to navigate through a hard market, but we also get to go through the risk management process. So I like this. I love going through this process too and teaching people about this. But the next thing we can do here is retain that loss. So maybe we don't transfer our risk to an insurance company, to anyone else. We just retain it. We say, I know the risk that's involved and I choose to keep it. Or we can transfer the risk, and that's where we are here. We can transfer it to an insurance company, which most people are aware of. And when we talk about insurance, let me go over here real quick. Insurance is a tool, okay? It's not the only tool. So yes, you see we can transfer it to an insurance company, but that's not the only solution. Let's first manage the risk. Let's do as much as we can on our end first, and then we can talk about transferring the risk. Because an insurance company won't want to, they won't jump up for joy to jump on a risk that does not have risk control processes in place. So if they see that you're not doing any of this, then your price will go up. If they see you're not doing any of this, then you won't get the best favorable term. So this here is very important. The risk control measures, not just because how your business may survive, but it's very important because this plays into what the insurance companies are looking for and for you to get the outcomes that you desire. But another way that we can transfer is not through insurance. There's other ways as well. We can transfer that risk through a contract. And that's what this says here, through a hold harmless agreement. So what that means is, let's say I contract with an IT provider to do my IT services, right? And in that contract, I may say the IT provider will hold COFINSE, or K for short, harmless, because that liability with the data breach or that liability with the data hack should lie with the IT provider, because they are the ones who are responsible for upkeeping the system and cybersecurity, and that doesn't rely on us. So that risk was mine until I transferred it over to a vendor. So that's exactly what a hold harmless agreement is. That you're going to hold me harmless through a contract. Is your responsibility, your liability, not mine. Or real quickly, we can go over hedging. So most people are familiar with hedging when people speak about hedging your bets. And what that means is you might put so much money if you're at the casino, right? You might put so much money on red and so much money on green or black. I'm sorry, red and black. So much money on red, so much money on black. Both, even though one color can win, right? So you're kind of hedging your bets. Yeah, you might lose some, but you won't lose a lot. And yeah, you might win some, but you won't win a lot. It's kind of a way to play it a little more safe. Again, it's not the perfect situation for everyone. It could be purchasing stock in maybe a competitor, or it could be purchasing stock in maybe a rival industry of yours, because you just want to hedge your bets a little bit. But that is how. So these are the ways that you can actually try to limit and control your risk, but also how doing this can get you better access to favorable terms and better pricing. So that's why it's very important to work with a risk manager or a risk consultant who can help you walk through these steps to control your risk, but also fight for you with the insurance company on your behalf to negotiate with you and for you to say, hey, my client is avoiding risk, loss prevention. I mean, they're doing everything that they can. So insurance company, I demand that you give them better rates than what you're giving everyone else, and you give them more favorable terms. Now, you may still see a rate increase. I want to be real and don't, want to paint a fairy tale picture. Okay. So you may still see a rate increase, but instead of a 20% increase that we're seeing on property, maybe you get a 10% increase, maybe you get a 5% increase. It's still an increase, and we never like that, but at least you're not, on par with the market is saying. You're under what the market is saying, and that's what we want. Okay, we want us to be a better than average risk, so we can get better than average pricing and better than average terms. But if you have any questions on how to manage your risk, how to navigate through this hard market that we're going through right now, or if you want a broker who's going to fight for you to make sure that you are getting the best terms and the best pricing, do not hesitate to send me a message. And as always, stay safe. Oh, and also, I don't want to forget this time. Please hit that like button or smash the like button, as all the kids are saying nowadays. Please hit that like button, and I really appreciate it. And please subscribe as well. As always, stay safe.